The historical cost principle is really closely related to reliability, which we looked at as a qualitative characteristic. And its definition is all transactions must be recorded at their original cost and shown in the firm's accounting reports at the historical or original price. This principle means that we never revalue assets to their current market value, whether up or down. It doesn't matter. We always keep them at their original cost. So because items are recorded at their original cost, there should always be a source document to prove that. We've obviously bought the item, we would have got a document, and that must mean there's got to be a really close link between historical cost, where we have sort of documents to prove everything that we've bought, and reliability, because information is reliable if it's free from opinions and estimates, and it can be checked with a source document. So really these two theories go hand in hand. You can't have historical cost without reliability, and vice versa. Looking at an example, a store selling mobile phones has 250 units left of last year's iPhone, valued at a cost of $350 each. Because Apple have just released a new iPhone, the owner believes the new iPhones will have, the old iPhones will have a net realizable value of only $280. So we bought some iPhones for this, but because there's a new iPhone out, we can only sell them now for $280. So the question is, explain how last year's iPhones should be valued in the balance sheet. So when we answer theory questions, identify. I'm going to identify the historical cost principle. I'm going to define it. All transactions are recorded at their original or historical cost. And then in this case, I'm going to relate it and say it should be left to $350. And look, this is where there's a conflict between some theories, because relevance says, well, that 350's got nothing to do with the future. Really, it's gone, and the only figure that's appropriate is the figure that we can sell it for. That's not what historical cost says. Historical cost says that whilst the net realizable value may be the more relevant figure, under the historical cost principle, all stock should remain valued at its historical or original price.